quite a quarter. Operating revenue up 6, car loads up 3. Help us understand how much of this is improved operating efficiency and how much of this is just macroeconomic, goods moving around the country.
Well, certainly we benefited from a pretty strong economy in the United States. It stayed pretty strong, and it's a good time to be in the freight railroad business and the freight business for that matter. But a lot of our results in the fourth quarter were specific to the Union Pacific team doing a tremendous job of improving our productivity and our service levels. So we're exiting the year on a very good foot and entering 2019 with a bit of optimism in terms of how we're running the network.
We always like to break down categories, product categories. One of your services that transports finished cars and auto parts up 15, which sort of flies in the face of a lot of fears of peak auto and depressed demand going forward regarding automobiles.
Yeah, well, remember that premium segment also includes intermodal, both international and domestic. And I think what we said was in our finished vehicle shipments that we were essentially flat on volume, which bucked the trend, the fact that U.S. car sales were down about 1%, light vehicle sales. But because we had opportunity to penetrate auto parts shipments and we also had some favorable mix that played our way in terms of relatively more SUVs and pickups and fewer sedans and coupes, that worked for us to be able to offset some of that weakness. But we saw a lot of strength in that premium segment when it came to international intermodal volume coming off the West Coast, as well as domestic intermodal.
All right, so how does that compare to other things we watch like agriculture and energy?
Yeah, so ag was off a little bit, mostly on the grain side, and that's a direct reflection of the tariffs and essentially China not being in the market for beans. So we had some other offsets to that, but I think that's the clearest indicator of what's happening trade-wise between ourselves and Asia. If you looked at other markets for us, the industrial markets all look pretty good. Steel, domestic steel's in pretty good shape right now. Construction products were in pretty good shape. Industrial chemicals, plastics. We saw a little bit of strengthening in crude in the energy market, but we also saw some substantial weakness in frac sand in that energy market. Our frac sand shipments were off something like 47% in the quarter.
Sir, I'm not sure how your business would necessarily interact with the government shutdown, but tell me, is there something that we could expect to see or as a result of 34 days so far and counting?
Yeah, I'll tell you I'm troubled that the government remains shut down, mostly because the potential impact it can have on consumers. You know, our heart reaches out to the employees who are both working without pay and not working and not being paid. Clearly, there's enough there to have an impact on some of the markets that we serve, but more broadly, that's just not a good look for the United States, right? I'm just a little worried that there might be an impact on the confidence of consumers, and you know that's the thing I pay most attention to is how confident is business and our customer base, and how confident are consumers, because that'll largely dictate what's going to happen on the demand side.
Finally, Lance, you know, you mentioned the shutdown. If there is some resolution short term to the dispute with China, and if there is a promise to, say, buy a lot more ag, just as an example, is that the kind of dynamic that would result in capacity constraints later in the year?
It depends. Speaking for Union Pacific, we have ample capacity to handle what would be any reasonable assumption on volume as we look into 2019. We said on our earnings call this morning for our shareholders that we are anticipating low single-digit growth on the top line. And we talked a little bit already about some of the items that might put that at jeopardy, but you just mentioned something that might juice demand as we move into the year. If we see a really sound, good deal between the United States and China, that lifts a bit of an economic overhang, and we could see China back in the market for things like grain product, and we might see consumer confidence and business confidence buoy again.